Just a little while ago, I was asked the question, what lot size should I use on an FTMO account? And as much as I would like to give you a simple answer like use 10 lots or use 5 lots, I really can't, because the lot size you're going to be using to trade is going to depend on your account size and also a lot of things such as your win rate and your risk management plan and all of that. And that's why in this video, I'm going to show you exactly how to calculate the lot size you're going to be using to trade on an FTMO account. So keep watching. Okay, so as you can see, this is a $200,000 FTMO account. And to kind of illustrate this point clearer to you, the rule of thumb for a lot of traders is to only risk 1% of their trading account's capital on each and every trade they take. So assuming you followed this rule and you wanted to risk 1% of your trading account's capital on each trade you took, let's say you're a breakout trader and you've identified, sort of like a bullish move on this chart. And as a result of this, you want to place a trade, a buy trade, when price breaks above this resistance area. Okay, it's broken above this one, and you want to get in on the market with a long trading position when price breaks above this area. So let's just round this number to 171.40. And let's say you want a pretty conservative stop loss. So your stop loss is going to be below this lows, because the idea here is that if price breaks below this lows, then it's probable that the trend is going to reverse or it might just stall or whatever. So let's say your stop loss is going to be placed at the 168.40 price level. Okay. Now here's the thing. We're risking 1% of this trading account's capital, okay? And that's $2,000. Now, pay close attention to the position size field here, which is your lot size, okay? Now, you can see that from this, if you were to take this trading position with your entry being at the 171.40 price level and your stop loss being at the 168.40 price level, then you would have to take that position with a 0.98 lot size in order to maintain that 1% risk per trade on this trading account, which is a $200,000 FTMO account. But pay close attention to this. Let's assume that you are not wanting to use kind of like a really wide stop loss like this, which is almost, a couple of hundred pips. Let's say you want to use a more aggressive approach. So you still have your trade entry level around this price area, but you're placing your stop loss instead of below this previous swing lows, which are quite far from price. You want to kind of step it up a little bit so that it's going to be placed below this most recent swing low, okay? So that it's kind of a little bit tighter than the previous stop loss. Now, as a result of this, you can see that your lot size has gone from a 0.98 for you to still risk 1% of this trading account's capital on this trade to a much bigger 2.08 lot size. Why? Because you're risking a lot less pips in this example, because now the pips you're risking has gone from something around 280 pips to just around 140 pips. And that's why your lot size has increased. So it's gone from 0.98 to 2.06. Now, using just this simple example, you can see that if I was to tell you that you should use 5.0 standard lots or whatever on an FTMO account, then that's not going to cut it, because the example I'm giving you here is using a $200,000 FTMO account. Now, if you were trading on a $10,000 FTMO challenge account, these numbers are going to be completely different. Let me just illustrate that to you. If you wanted to be risking 1% of your $10,000 account on each trade you took, that's going to work out to be something like 1% of $10,000 should be around $100, okay? Now, if that's what you wanted to be risking, okay, I made a mistake here. I should type in the 100 here. Okay, yeah. So if this was what you wanted to be risking, you can see that on that $200,000 FTMO account, we were supposed to be trading with 2-point-something lots using this aggressive trade entry with a more tighter stop loss. But now, if this example was to be used on a $10,000 FTMO account, we would have to be taking this trade with a 0.10 lot size. Why? Because this is a much smaller account, and as a result of this, the lot size is going to reflect that in the percentage which you're supposed to be risking on the trade. And what if we wanted to be taking this same trade, but with the conservative stop loss, like we did in the previous example, but on a $10,000 FTMO account? You can see that our lot size has gone from using a 0.10 something lot size to using only a 0.05 if we still want to be risking 1% of that $10,000 FTMO account. So using this example, I'm pretty sure you see why I can't just tell you to go and use this lot size or use that lot size to trade on an account, because your lot size needs to be dynamic in line with the risk management plan that you've designed. So So if you wanted to be risking 1% of your trading account capital on each and every trade you took, then your lot size would need to be worked out or calculated so that it's going to help you to risk exactly that, no more, no less. Okay, so I hope this answers the question. And for those of you who are still struggling to become profitable traders, I've designed this Profitable Forex Trading Crash Course series, which is a crash course designed to help you go from being losing traders to consistently profitable Forex traders in a step-by-step manner. So you can click on the link in the description box to get instant access to the crash course. In the meantime, if you would like to learn exactly how to pass the FTMO challenges, then you would need to click on this video, because inside it, I lay exactly step-by-step what you should be doing, how to plan, and also the strategy to use to pass that FTMO challenge. So click on the video right now to go and watch it and go out there and crush the market.